there's a tax strategy that the IRS explicitly permits that has been written into both the Internal Revenue Code and the Fair Labor Standards Act for decades, and that allows parents who own a business to hire their own children as employees, deduct the children's wages as a business expense, and in the process, eliminate a punishing 15.3% payroll tax on every dollar those wages represent. The first $14,600 of each child's wages in 2024 are completely exempt from federal income tax at the child's level because of the standard deduction. And if the children are under 18 working for a parent's sole proprietorship or partnership owned entirely by the parents, their wages are also exempt from Social Security and Medicare taxes entirely, meaning no FICA is paid by either the employer or the employee on those earnings. The combined effect is this: a parent in the 32% federal tax bracket who pays their 12-year-old child $10,000 per year for legitimate work in the family business deducts $10,000 from business income, saving $3,200 in personal income taxes. The child pays zero federal income tax on the $10,000 because it does not exceed the standard deduction. The child pays zero FICA because of the FLSA exemption for children employed by their parents' unincorporated businesses. The $10,000 that was taxed at 32% in the parent's hands is now in the child's hands at 0%. The total tax savings on that $10,000 transfer is $3,200 per year, per child, every year until the child turns 18. Welcome to the Invisible Ledger. If these stories matter to you, hit subscribe and the bell. This is where we trace the money they told you not to follow. The legal foundation for employing children in a family business is established in two separate bodies of law that work in concert. The Internal Revenue Code provisions that govern this strategy are found in Section 162, which allows the deduction of ordinary and necessary business expenses, including wages paid to legitimate employees, and Section 3121B, or 3, which exempts from FICA taxes services performed by a child under the age of 18 in the employ of their father or mother. This exemption applies when the employing entity is a sole proprietorship or a partnership, in which each partner is a parent of the child. It does not apply to corporations, including S corporations and C corporations, or to LLCs that are taxed as corporations. This entity type distinction is the single most important compliance detail in the entire strategy. The Fair Labor Standards Act, the federal law that governs minimum wage and child labor standards, permits children under 18 to work in businesses owned entirely by their parents in most occupations, with the exception of mining, manufacturing, and any occupation declared hazardous by the Secretary of Labor. For most small businesses, service businesses, professional practices, retail operations, and online businesses, the FLSA child labor exception allows children of any age to work for their parents without restriction on hours or tasks, subject to state child labor laws which may be more restrictive. The strategy traces back to at least the 1950s, when family farms routinely employed children and the tax code explicitly recognized the legitimacy of that practice. The IRS has audited and tested the family employment strategy repeatedly over the decades, and its conclusions are consistent. The employment must be genuine, the work must be real, the wages must be reasonable for the work performed, and the records must be maintained as they would be for any other employee. When these conditions are met, the deduction is allowed and the FICA exemption applies. Before I go further, this video is just the surface. Inside the Invisible Ledger vault, you will find the complete family employment compliance guide, the age-appropriate task list organized by business type, the payroll setup checklist for child employees, the Roth IRA contribution guide for children with earned income, the state child labor law reference chart, and the documentation template for establishing genuine employment records. The link is in the description, but stay right here. The types of work that qualify are broader than most parents assume. A child as young as 7 or 8 can perform legitimate business tasks if those tasks are age-appropriate and genuinely performed. Social media content creation for the business, photography for the website, filing and organizing business documents, data entry, packing and shipping products, cleaning and maintaining the business premises, answering business phones, creating marketing materials, and assisting at business events or trade shows are all legitimate tasks for which reasonable wages can be paid to children of appropriate ages. The wages must be reasonable for the work performed, meaning a 7-year-old cannot be paid $50 per hour for filing, but a $15 per hour rate for genuinely productive work is defensible. The IRS audit scrutiny on family employment centers on 4 elements. First, genuineness. Did the child actually perform the work? Second, reasonableness. Is the wage appropriate for the type and quality of work? Third, documentation. Are payroll records maintained in the same manner as for a non-family employee, including time records, pay stubs, and W-2s? Fourth, payment. Were the wages actually paid to the child in the child's own account and not diverted back to the parents? The documentation requirement is not optional. The child must have their own bank account. Wages must be deposited into that account. W-2 forms must be issued at year end. Payroll tax returns must be filed to report the exempt wages. The child's work schedule and tasks should be documented in a manner that would satisfy scrutiny if the records were reviewed in an audit. The employment arrangement should be established by a simple employment agreement specifying the job description, the hourly rate, and the expected hours. If you have made it this far, you understand the family employment strategy at a level that most parents who own businesses have never applied to the work their children are already informally doing for the family enterprise. Subscribe and share this video. The Roth IRA dimension of this strategy creates a compounding benefit that transforms the annual tax savings into generational wealth building. Any individual with earned income can contribute to a Roth IRA, including children. A child who earns $10,000 in legitimate wages can contribute up to $7,000 to a Roth IRA in 2024. A Roth IRA grows completely tax-free, and qualified distributions in retirement are tax-free. If a 12-year-old contributes $7,000 to a Roth IRA and that account grows at 7% annually until retirement at 65, the initial $7,000 contribution will have grown to approximately $170,000, completely tax-free. If the child continues contributing for several years through high school, the tax-free retirement account balance grows commensurately. The parent's deduction, the child's zero tax liability, the FICA exemption, and the Roth IRA compounding create a 4-layer benefit that converts wages that would otherwise be taxed at the parent's rate into tax-free retirement savings for the next generation. Now let me give you the exact steps. Step 1. Confirm your business entity type. The FICA exemption applies only to sole proprietorships and partnerships, where each partner is a parent of the child. If your business is an S corporation or C corporation, restructuring may be required to access the FICA exemption. Some business owners operate a sole proprietorship alongside a corporate entity for this specific purpose. Step 2. Define legitimate job descriptions for each child based on their age and the actual needs of your business. Be specific and realistic. The tasks must be genuinely useful to the business. Step 3. Set a reasonable hourly rate by referencing what you would pay a non-family employee for the same work. Keep the rate within the range of market comparables for the geographic area and the type of work. Step 4. Establish a payroll system. Services like Gusto or QuickBooks Payroll can process payroll for child employees and generate the required W-2s at year end. File Form W-4 for the child using their standard deduction amount. Step 5. Open a bank account in the child's name. Deposit payroll checks directly into the account. Do not deposit wages into a joint account you control. Step 6. Document the work. Keep a log of dates worked, hours worked, and tasks completed. Have the child sign the log periodically. Keep this documentation for at least 4 years. I need to be honest with you. The family employment strategy has real requirements and risks. First, the work must be genuine. A child who is paid $10,000 per year but whose work records show no specific tasks performed, no time documented, and no actual business contribution will not survive an audit. The IRS has disallowed family wages in cases where the employment was found to be a fiction. Second, the wage must be reasonable. Paying a 10-year-old $50,000 per year for social media work will be reduced to a reasonable market rate by the IRS, with the excess disallowed as a deduction and potentially recharacterized as a gift subject to gift tax. Third, the FICA exemption requires the correct entity type. S corporations and C corporations do not qualify for the exemption under Section 3121B. 3. If your business is incorporated, the child's wages will be subject to full FICA taxes, which significantly reduces the strategy's benefit. Fourth, state income taxes are separate. Some states have their own income tax exemptions for dependent children, but many states do not conform to the federal standard deduction, and the child may owe state income tax on wages even if no federal tax is owed. Fifth, the child labor laws of your specific state may impose additional restrictions on hours, tasks, and timing that go beyond the FLSA exemptions. Research your state's specific child labor statutes before implementing. Your grandparents, who ran farms and small shops, had children who worked, not as a tax strategy, as a way of life. Children swept the floor, counted inventory, answered the telephone, stacked shelves, and delivered messages. They were paid, formally or informally, and the family enterprise moved forward on the labor of everyone in it. Then one generation separated childhood from work entirely, and the next generation forgot that the tax code, in recognizing what was once universal practice, created a benefit that still works exactly as it was designed to. There was not a more natural system. There was just one where children worked, because the alternative was that the family did not eat. The tax benefit is a remnant of that world. It requires only that the work be real. Subscribe and share this video. Every share puts the family payroll checklist in front of a business owner who is already having their children help with the business and has never been paid $1 of tax benefit for it. The next vault opens soon, and what is inside will reveal billions of dollars in unclaimed money sitting in state databases right now with your name on it that no bank has ever told you to look for.